This is Christopher Lewis from the dailyforex.com trading desk looking at the Euro US dollar pair for the upcoming March 28th session. As you can see, we had a down day on Tuesday, and what I find most interesting about this is the fact that we had smashed through, and I'm using a broad term here when I say 132.50, it really was about 133 that actually made the breakout interesting. We'd smashed through that after comments out of the Federal Reserve Chairman Ben Bernanke's mouth, suggesting that low rates were the future for the foreseen future. And the fact is that we had smashed through, as you would expect. It's very dollar negative news, but we're starting to see signs of dollar strength in several different pairs right now. For example, the Kiwi dollar is definitely looking dollar positive at the moment. Whether this is a long-term trade or not, of course, remains to be seen. The euro has plenty of headline risk out there just waiting to happen, and the bond markets are starting to spike again in some of these periphery countries. Having said all of that, the lackluster follow-through for the Tuesday session really would have me concerned if I were bullish. I see one or two scenarios that I want to act on currently. 135. If we get a bounce to 135 and see some type of weakness there, I would be very quick to pounce on that and sell, because you obviously have an area that if you close above it, you're wrong and you get out with a relatively small loss. If we can break back through the 132.50 level, I would say that that basically negates any bullish momentum that we had from the Monday session and Mr. Bernanke. That would be a very negative sign for the euro. In general, I want nothing to do with owning the euro with all of the headline risk. Most investors are going to feel that way, and as such, they won't be buying European stocks, European debt. They won't need the euro. The market needs to close above, it could be a post 135 close in order for me to consider going long. At this point in time, there's just simply far too many reasons to think that that just is not going to happen. Beyond the debt markets, people will start to focus on GDP and actual economic situations. The Eurozone has many countries that will be going into recession, while the United States isn't exactly robust. It isn't exactly faltering into recession either. The lesser of two evils kind of situation, as this pair quite often is. So I'm looking for weakness at 135 to sell, or a breakback down through the 132.50 level on a daily close, and I would be short. The only way I'm going to go long is if we're above that 135 mark on a daily close.